gold bulls hit a roadblock on their way to $3,000, sparking questions about potential shifts in market dynamics and trading strategies. So what's behind the pullback? Could we see another push towards $3,000 soon? And what kind of risks might still be underpriced? Get the full breakdown in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has been pushing higher, setting fresh records along the way. But it's hit a clear roadblock just shy of $29.50. Safe haven demand driven by concerns over tariffs and US debt repayment, along with some front-running trades ahead of potential gold tariffs, has been supporting prices. That said, aside from profit-taking, there are also risks of a more sustained or, I would say, deeper pullback. This week's US CPI and retail sales data could bring some volatility to gold, and of course, tariff policy updates remains a key factor to watch. Looking at the gold against US dollar daily chart, the overall uptrend is still quite intact. Gold broke above $2,900, reaching a record high of $2,942. But as the price gets closer to that psychological $3,000 level, resistance is becoming more apparent. Just as it was about to break through, heavy selling pressure kicked in, sending prices tumbling by over $60 intraday on Tuesday before closing below $2,900. So if downward momentum continues, it would be important to watch how prices react around the 5-day EMA and $28.85. While on the flip side, if shorts start covering, $3,000 naturally remains the key level to watch. Well, I believe the big questions now are, can gold make another run at $3,000? And is the recent pullback just a dip or something bigger? Well, personally speaking, I feel like I'm quite bullish on gold. Because for one, market has already priced in a lot of the tariff risks, things like trade tensions, corporate margin squeezes, and even some reflation concerns. So beyond hedging against the 25% steel and aluminum tariffs and maybe potential reciprocal tariffs, there's now a bigger focus on recent comments about US debt. The president suggested that the Department of Government Efficiency discovered anomalies in certain treasuries, raising fears that the US could cast doubt on its own debt obligations. Well, the White House hasn't really provided any specifics. The mere suggestion has fueled safe haven demand, driving gold higher. Then there's the supply issue. Physical gold is getting harder to come by. With speculation that Trump could slap tariffs on gold imports, a ton of physical gold has been moving from global vaults, especially in London, into US COMEX, either for delivery or risk hedging. We're seeing the same thing happen in other metals markets like copper, which has been driving up prices across the board. And this has also drained liquidity in London, where gold delivery times from the Bank of England have stretched to 6 to 8 weeks. So with strong demand and tight supply, it's no surprise gold keeps climbing, right? Also, central banks in emerging markets are piling in. In Q4 2024, Poland, Turkey, India, and China all ramped up their gold purchases, marking the third straight year that central bank demand has outpaced supply by over 1,000 tons. On top of that, China is considering allowing insurance chains like China Life and PICC Property and Casualty to invest in gold, which could drive even more demand. So for now, the path of least resistance still looks higher, but that doesn't mean a deeper pullback is off the table. In my view, 3 scenarios could trigger increased short positioning. For one, if US economic data comes in much stronger than expected, especially if inflation cools quickly and rate cut expectations fade further, gold could take a hit. Another risk is a global liquidity squeeze, like the one we saw last August, which could drag gold down. And then there's the possibility of US tariffs on Europe or gold actually happening. Because right now, traders are rushing gold into COMEX because of short-term uncertainty. But if those tariffs go through, we could see some price adjustments. Out of this risk, the tariff scenario seems the most likely, so it's something to watch for sure. So now the big picture would be gold has been testing new highs, but $3,000 is proving to be a tough nut to crack. Safe haven demand and supply constraints are keeping the bulls in control, but there is always the risk of a pullback. This week's US CPI and retail sales data could shake things up. Markets expect a core CPI to dip from 3.2% to 3.1% year-on-year, with the headline number holding steady at 2.9%. Retail sales expectations are weaker, with a forecast of negative 0.1% year-on-year for January. So if core inflation comes in below 3% and retail sales show a decline, it probably won't change the Fed's March decision, but it could give gold a slight boost. On the flip side, if both numbers come in hot, gold could face some short-term pressure. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!